My name is David Jaffee. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. Tom Lee, we're at a structural low. Urgent warning to all investors by Invest with Henry. I watched this video earlier and it's really good. Henry made a lot of good points that I had also made in my trade alerts regarding decreasing volatility and risk levels. So let's go through them.
This is one of the most volatile times I've seen since 2020 or even 2008. But if there's one thing that proves certain for sure, no matter what the circumstances are, is that the investor that stays calm and takes advantage of opportunities does far better than the investor who panics. Investors
I agree
who
with
panic
that.
and make emotional decisions almost always lose. So let's take a couple of minutes and actually look at the technical analysis from Tom Lee and what he thinks is the structural support in this market.
But there is some significance to the fact that the VIX was at 60 and now it's at 31. Let me explain. There's three numbers I want to highlight. The VIX was at 60 on April 7th. And then on April 11th, the VIX closed at 37.56, which is an important level. And then earlier this week, it closed at below 31. The VIX above 60 has only happened a handful of times. It happened, of course, this past week. It happened during the GFC.
Right. So VIX over 60 is basically COVID. That's 2020. And then 2008, the great financial crisis. That's when we saw VIX over 60. Recently, we've also seen VIX over 60, and now it's coming back down.
Well, let's look at the GFC. Let's use those three dates or those three levels I marked. The VIX above 60, which was October 2008. The VIX falling below 37.56, which didn't happen until January 09. And the VIX closing below 31. Well, importantly, when you close below 31, you were past the low because the low was March 09. During COVID, the VIX didn't close below 37.56 until March 24th, 2020, and it didn't close below 31 until April 2020, but you were already past the low. So I think that we're still at a bull market. I'm just not clear if it's a V-shaped recovery like 2020 or...
My gut feeling is that we're going to be range bound because there's too much uncertainty. I think that continued volatility is something that we're going to experience where many people are going to be on edge. But as the number of things that could possibly go wrong end up working themselves out, such as tariffs and China and Iran and Russia and Ukraine and lower interest rates and tax cuts, as those dominoes start to fall, then I think the market is primed to climb higher.
A range market like 2011. Intuitively, I'm going to say that it makes sense that we made a bottom, but we're maybe range bound for a bit.
This is actually the best opportunity if the market is going to be range bound to sell put options, exactly what I showed in my yesterday video about Palantir.
It's not a bad idea. I'm not sure that Palantir is the best stock to sell put options on, considering that Palantir's recent price action has been very high. And I also believe that over the past month, Palantir is one of the few tech stocks that have actually increased in price. So it definitely does have strong price action. However, I believe that a better value play would be to sell put options on something like Google or Amazon or Microsoft or even Meta. Even though with Meta, you have the additional uncertainty of the United States trying to break up the company. However, I do feel that the stock is oversold.
Strategies that I'm using in my portfolio right now. I sold puts on Palantir, sold puts on NVDA. I'm looking at buying Apple stock right now. I'm looking at buying companies, but instead of just buying into them, I'm selling put options, which supports exactly what Tom Lee is saying. If we're gonna go sideways and we get zero returns for the next 3 weeks, 3 months, then the best opportunity will be to still create income and to purchase companies as they are going back up, as they have this recovery that's not going to be V-shaped.
If the market is going to be treading sideways and then in the future it's going to increase, you're probably better off buying shares and then selling covered calls. Or if you're going to sell puts in order to collect extra premium, then you'd want to sell puts at a strike price where you wanted to take ownership of the stock. So probably selling a 50 or 60 delta. That way you're pretty indifferent whether you take ownership of the stock or you continue to sell put options and collect a lot of premium.
that there's other shoes to drop. I mean, the tariff war with China could turn into a Cold War. Investors are going to worry about the ripple effects from this shock leading to a global recession. These are extreme views, by the way. That some people are going to worry about a financial crisis from all this deleveraging. And inflation expectations could surge to an extent that we get greedflation. Remember, that's like companies basically raising prices, and it's going to force the Fed to hike. And of course, if estimates fall more than 20%, stocks have downside because the stock market already had a 20% drawdown. But the internal low seems to have been in place. This is the percentage of stocks above the 50-day moving average at the top and above the 200-day moving average on the bottom. Below 20% is a big deal because over the last 16 years, the S&P was higher 6 months and 12 months later. In fact, if you look at 3 months later, outside of 2022, the stock market was higher 3 months later every single time. So I think we did make a structural low.
So guys, what's really interesting is when there's a lot of fear in the market and the VIX is over 60, and that's basically what we saw in October of 2008. And then a couple of months later, in January of 2009, basically we had the bottom. And then when things were recovering in May 2009, then basically the market was past its low, as Tom Lee was saying. And we're in a very similar market right now. It looks exactly the same. There was a huge sell-off and basically everyone got out of their stocks, but we've already seemed to have hit that low. So a lot of people have lost money.
Yeah, I would agree with that. I think that now is a good time to be cautiously optimistic. The problem when you sell put options, and this is something that I see quite frequently, when they sell a put option at that moment, when they put the trade on, they don't mind getting assigned the shares. However, as the market continues to fall and then that strike price ends up getting challenged, suddenly they no longer want to take ownership of that stock at the strike price. And that's a psychological impediment because when they put that trade on, they had no problem taking ownership at the strike price. But as the stock market fell, then they no longer wanted to own the stock at that strike price. The best way to combat that is to ask yourself anytime you put on a trade, do I feel comfortable owning this security at this strike price? If the answer is yes and the market falls, take ownership and run the wheel. If the answer is no and the market continues to fall, then you can either roll or manage that trade, or you can simply close it out for a loss. That way you don't incur that much stress.
Many investors have gotten out of the market, have quit investing, have given up on option trading, have given up on long-term investing, short-term investing. They're out. They're done. And now that we're getting a recovery, the investors that have been holding, then you have started to recover your money. We're going to get a slower recovery, unlikely to have a V-shaped recovery because we already had so many V-shaped recoveries since 2020. Of course, there were mini recoveries, but right now I think investors are going to be more cautious. And it's really important to directly compare this to the VIX and to 2008 crisis because there's a lot that we can learn here. The VIX was at 60 before the market fully crashed and hit a low. Then after the low, the VIX settled down around 30, marking the passing of the market's low. So what does this mean for the market crash happening right now? It means right now is essentially the urgent time that you should be taking action. There should be no more waiting and guessing because...
Yeah, I think that right now is a good time to establish new positions in some of your favorite companies at prices that are 20 or 30% below where these same stocks were trading at just a few months ago. Let's stop it there. We don't have to go through the rest of the video, but this is a good video by Henry and it's something that I definitely agree with him on, where psychologically people are always concerned that the bad times are going to continue. However, the market is telling us through numerous indicators, by looking at VIX, by looking at VVIX, by also looking at some of the recent price action, that even if the market trades sideways and doesn't increase, the low is probably behind us. Now, the market is very sensitive to geopolitical issues and also interest rate decisions, and it seems that many branches within the US government are at odds and fighting one another. That's something that I've never experienced in my lifetime. And because there's not a historical precedent to something like this, I have no idea how the market's going to react to additional uncertainty. However, what I can say is if I was a betting man, I believe that the low is already in, and I believe that we're going to trade sideways until some of the uncertainty is no longer a factor, and then we'll continue to climb higher. David Jaffee with beststockstrategy.com. If you like this video, then please subscribe and leave it a like, and watch the video that's popping up on your screen right now because YouTube believes that you would enjoy it the most. Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and a review. If you have any questions, visit beststockstrategy.com and send me a message.